I wanted to also turn to another topic that we've talked a little bit about, but how old is this bear market? And that answer kind of depends on whether you're judging it by the S&P 500 or you're looking at other indexes, isn't it?
Yeah, yeah. I actually think the bear market's pretty old. I think it started, if you look at small cap indexes, mid cap indexes, those things peaked in the spring of 21. So you're well over, a year into this bear market if you're in small cap or mid cap stocks. Obviously, the S&P 500 didn't peak till later. The NASDAQ actually peaked before the S&P. NASDAQ peaked in November of 21. S&P was the last one to peak in January. Actually, I think it was the second trading day of the year. So yeah, like the bear market's been going on a while. Or even if you're looking at the S&P, you're 9 months into it. If you're looking at something like the Russell 2000, it's more like 18 months. Look, I don't, everybody wants to know when this thing's going to end, and I can't really give you an answer for that. We can look at averages and see what bear markets have done in the past, but we don't know. But I can tell you this: I lived through the one that was 2000 to 2002, so it can last a long time. That's a 2-year bear market that was just brutal. You came in every day, and the market went down. It was demoralizing in a way. But you know what? I will tell you this: it passes. You get past it, and you move on, and you go and do different things. Bear markets are times to preserve capital and try not to get too panicky. Stick to your strategy, and just wait. It's about patience.
Yeah, and also, a lot of times it can present great buying opportunities. There's the old Warren Buffett quote: "To be greedy when others are fearful, fearful when others are greedy." Maybe you could talk a little bit why sentiment's a contrarian indicator, and
Yeah.
why you actually do want to be a lot of times a buyer when everybody else is a seller.
Well, I think that's one of the things that people get wrong about macro the most. Everybody wants to follow the macro economy, and they think, well, if I know what's going on with the economy, I can figure out what to do with stocks. And I'm going to tell you that most people get that exactly backwards. Look, you want to be a buyer of stocks when the economy is at its worst. When the economy is absolutely awful, in the middle of a recession, we're at the bottom, the worst part of the recession, you need to be a buyer. That's when it's going to be cheapest. And history says the stock market is going to bottom before you get to the end of the recession. So you got to figure out somewhere when things look really bad, you got to figure out, where is it do I buy? And you got to be thinking about that all the time. You got to be thinking, should I be a buyer yet? Should I be a buyer yet? And we judge that by sentiment. Look, when everybody gets on one side of the boat, it's going to rock back the other way. It's just inevitable. And if everybody that wants to sell, everybody's panicked already. Everybody's sold whatever they want to sell. Once you reach that point, the only thing left for them to do is buy again. We watch things like how short are the speculators. Are speculators very, very short? We watch put call ratios. We want to see where people are buying a lot of puts, betting that the market's going to go down, which, by the way, institutions are maximally hedged right now in the option market. They own the number of puts, and the price they're paying for them is just off the charts. People are very, very negative here. It's why that we've been, if you read our commentary, my commentary in particular, there's a little bit of a positive hope to it, a positive slant to it in a way. That's what you have to do. You got to lean into this stuff. I'm going to tell you something. It's hard when everybody around you is just negative as hell and everybody's telling you how awful things are. That's when you got to be stepping up and when everybody else is fearful, as you said. Now, it's hard too in this case, because if you go out and walk around in your town or your city, the economy is not bad. And everybody, if you talk to people in the market, you listen to CNBC, you're on Twitter, good God, if you end up at Zero Hedge, you're going to get inundated with just this negative information. Every economic report that the bears are going to find whatever's wrong with it, whatever's not positive, they're going to find it. And if they can't find anything, they'll make something up. It is just extraordinarily negative out there. And the way I look at it is if everybody's negative, then everybody already sold. Now, I will say, you have to be careful about this. You can't just look at polls. People want to look at things like the American Association of Individual Investors poll. Those things don't work all the time, because people can say one thing and do something else. If you want to use American Association of Individual Investors, they do have interesting information on their website. The interesting information that was in the asset allocation piece, look at what people are doing not what they're saying. So look, sentiment is a tough thing. You can't ever be, it's not exact. It's always one of those things. And I tell you, the longer you do this, the better you get at it. I've been doing this for 40 years as an investor, 30 years as a professional, 31 years, good Lord. But you get a feel for it. You get the feeling when everything turns negative and when people are kind of reaching a peak negativity. That's what John Templeton's thing was. You got to buy at the point of maximum pessimism. That's a hard thing to do, man. But it's one of those things. I think who was the Supreme Court judge? I forget who it was. Who said he knew pornography when he sees it. Yeah, well, I know maximum pessimism when I see it, but I can't tell you how to describe it.